Hi guys, it's Lachlan from Bell Property here. In the wake of Britain's recent decision to leave the European Union, I've had a lot of homeowners and prospective buyers asking, what could this mean for us? Should we wait, or is now still a really good time to transact property? Well, I think once you strip away the overblown negativity and really look at the facts as they pertain to our local market, the overwhelming theme is one of continued stability and of immense opportunity. Allow me to delve just a little bit deeper into a few of the key reasons why. Buyers and sellers in both the residential and commercial markets can take a lot of confidence out of the fact that Australia is already viewed as a safe haven on the world stage. We attract a lot of global capital already, and as a result of good economic growth, low sovereign risk, and obviously that stability that I mentioned, we can only expect that flow of global capital will increase, which is obviously a great thing for anybody looking to sell. There's only 15 banks in the world that benefit from the highest AA2 credit rating. 1/3 of those banks are now Australian. What that means is they've got cheaper access to funding relative to their other peers, and what that translates to buyers in our market is greater access to funds coupled with lower interest rates, meaning incredibly favourable conditions for buying will still continue. There's been a lot of discussion recently as to whether Chinese money would head for Australian stability or look to take advantage of the weakening pound. However, Chinese investment strategies in the UK are generally around large commercial assets. In Australia, lifestyle, residential property. So it'd be very unlikely that the weakening exchange rate would alter that strategy. That's great news obviously for the Sydney market, as it's been a driving factor over the past couple of years. Buyers alike can take confidence in the fact that although this activity will increase competition and potentially continue to raise prices, it will underpin and uphold the value of any properties they purchase now for years to come. Whilst many leading economists have various views on the ramifications of Brexit, they do tend to have one theme in common, that the only direct impact on the Australian property market would perhaps be a slight decrease in consumer sentiment while the world digests what has occurred. It's crucial to remember that the actual exit from the European Union will be years in the making and will be carefully strategised by economic and legal experts to minimise instability and mitigate risk. So what's the important takeaway for those looking to transact property? Well, we can all continue to be confident in the resilience and strength of both the Australian financial system and economy, and as such, maintain our confidence in the strength and security of Sydney real estate.